Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always happens, but it's been increasing over the last 50 years since the Vietnam War. The government has been getting bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto. This is your Coffee and Crypto Live. This is your weekdaily morning show where we bring you the latest in everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about whether or not Bitcoin is currently entering into a bear market. As you know, there is a very hot debate going on in the crypto space right now about whether or not macroeconomic conditions are going to catapult Bitcoin into a bull market in 2026, or whether the four-year halving cycle is going to send Bitcoin back down to the 200 weekly moving average, down around $45,000 to $60,000 at some point around mid to late next year. Today, we're going to be discussing whether or not anything has changed on our prediction, and we're going to talk about what the next week or two looks like, because I personally believe that Bitcoin is about to witness a rally back up towards about $100,000 to test the 50 weekly moving average, and from there, we're going to get a lot more information about whether or not Bitcoin is going to go into a bull market next year or not. Appreciate everyone being here today. Big shout out to everyone. Chaos is in chat. Edward Eva is in chat. Christopher Ryan's in chat. Said financial sovereignty for the win. Indeed. Dan Green is in chat. Christopher Ryan's again. Crypto OG. Adrienne Sophia. Jasibur is in chat. Luis. Bartizan. Ruben. Pat B. Wealthrow is in chat. Theta Frog, Angela in chat. Good morning, everybody. Hope that you guys had a wonderful turkey day. We had a lot of fun, saw a lot of family. It was a great time. Had a wonderful time cooking, eating, hanging out. We put a rope swing up on a sweet gum tree. It was a lot of fun. We had a grand old time. Let's get started. Bitcoin is currently trading at $91,000, and understandably, people are a little bit confused about what Bitcoin is doing here because we simply do not have a lot of confidence. I was asked about this yesterday at Thanksgiving, actually. What is Bitcoin going to do? And genuinely, there's a very strong argument to be made that Bitcoin 1 year from today is at $50,000, and there's a very strong argument to be made that 1 year from today, Bitcoin is at $200,000. Genuinely, that is a very, very serious position. We don't have a lot of understanding about which one is going to happen. So let's talk about both scenarios. Let's talk about what we are very confident will happen in the next week or so. Then let's talk about which scenario I think is more likely. As you guys know, I am obviously leaning in the bearish direction. All right, let's get started. First thing we want to do is look at the longer term. Just do a quick recap. Something I want you guys to remember is that Bitcoin is currently sitting above this support right here. When we drop down to $80,000, we found support right here on this massive bull market inverse head and shoulders pattern target. If we can stay above $80,000, if we rally up to 100, backtest this and just rally higher and create a head and shoulders pattern and then don't actually break bearish, this is also a bullish outcome. This is something that I want you to understand, is that Bitcoin is likely going to take the bottom here at 80,000 and rally back up to the 50 weekly moving average. And even if Bitcoin does reject off of it, it's not necessarily the end of the possibility of a bullish next year. It is very possible that Bitcoin on the weekly chart rallies up here, tests the 50 right there around $100,000, and then ends up rejecting off of the 100, off of the 50, coming back down, back testing this. This would create a head and shoulders pattern, which would theoretically give us a price target right down there towards the bottom of what we would expect to happen in this cycle, which would be about $50,000. And then Bitcoin could just, not actually break. It does really come down to whether or not Bitcoin can get above the 50 or whether or not it's going to break below this uptrend. So kind of the overall point I'm trying to make here is thus, If Bitcoin gets above 100,000, stays above 100,000, and especially if Bitcoin gets up here to 107, we've talked about the liquidation heat map quite a bit. There's a lot of leverage sitting up there waiting to get liquidated at 107,000. If Bitcoin's able to rally another $16,000, then that is where we would break above the 50. We'd have a very strong confirmed break above the 50, not the way that we rejected here. We got above it. We only closed at one weekly candlestick up there. We were only up above it for a couple of days, and then we plummeted back to the downside. Instead, what Bitcoin would be looking at here would be a confirmed break and holding above the 50, which would require us going back to 107. So in summary here, if Bitcoin can break through this zone, if Bitcoin can break through this zone right here, right? Bitcoin can do this. They can just break up here. Then this would equal super cycle, bullish 2026. 150 to 200K next year. That's what this would equal. This is based on all of the mountain of analysis that we've done. If we can get through the 50, and especially if we can hit those short liquidations up here at 107, because remember, 107 is actually a very important level. If we look at 107, you're going to see that it has played a very serious role in Bitcoin for quite some time. It shows right here was the all-time high at 109, just right above it. Then we also had a great deal of trading around 107. We used it as support once. We came almost down to it here. We built a head and shoulders pattern here that dropped us, right? This head and shoulders pattern's neckline was at, you guessed it, 107. When we started to go through this crash, we did an overside, underside test of 107. So 107 really is the line in the sand. If you break above 107, I would long all the way back to all-time high. If we break above 107, I will enter into a leverage long all the way back to all-time high, because if we can break above it, stay above it with confidence, get an underside overside test, you know, come up here and do this number, right? Or something like this with the underside overside test, then that would give us the confidence that we're going to knock out all the liquidity, and then Bitcoin is going to rally. And so that's kind of my bullish scenario, is that Bitcoin is almost certainly going to rally to $100,000 soon. But if it stops short and doesn't get above 107, then at that point in time, we're probably going to fall over. But look, if you want to trade, this breakout, I do highly encourage you to check out the exchange that I personally use, and that would be none other than 2Bit. If you guys have not already, make sure to sign up for 2Bit. Links in the description box down below. This is where I do a lot of my leverage trading, and if I take a trade, it will be on 2Bit. So if you want to trade right alongside us, make sure to check out 2Bit. Link is in the description box down below. Awesome. Continuing right along here, let's talk about the likelihood of actually breaking through 107. There's something very interesting about 107. It sits right here just above the 0.618 Fibonacci off of the entire retracement. So Bitcoin needs, in other words, to get above the 0.618. All of these people that have shorts, this is an excellent place for a liquidation and or a stop loss to be. Now, obviously, I think it should be a stop loss, not a liquidation, but you understand the point. That's an excellent place, is right here above this high right here, because it is this high that, you know, this is the overall leg down to 80, 107 down to 80. This was a $23,000 crash, but also it's above the 0.618 at 106,238. So Bitcoin desperately needs to get up here above 107, and if it does, then you'll build this big inverse head and shoulders pattern that'll point us towards back up towards 125,000. You'll go up probably towards, you know, 130, 140,000. So that's your path forward if you want to go back to all-time high, is you have to break through 107. To break through 107, you first and foremost have to get to 100,000. Okay, so that is exactly what you need to see happen. If you can break through this zone between about 100,000 and 107, that's where you step on the accelerator and you just kind of gas it back up to all-time high. Bitcoin would be extremely bullish at that point in time, and that would invalidate the bear market. If you broke above 107, start heading towards a new all-time high, that would invalidate the bear market, because this high is exactly timed perfectly to be the top of the 4-year halving cycle. It is 1,050 days after the bear market bottom. This is the very same thing that you saw happening with the last bull market. It was 1,050 days after the bear market bottom. And if you go back here to the 2016, 2017 bull market, you're also going to see that it was 1,050 days after. So the October 6th high was perfectly timed to be a 4-year halving cycle all-time high. The question now becomes whether or not it will hold. If we get a new all-time high at any point in the next year, then the 4-year halving cycle is completely and totally invalidated. Now, let's talk about what is, at least at the moment, the more likely scenario. The more likely scenario at the moment is that Bitcoin is going to, one way or the other, rally back up towards $100,000, And then if you see Bitcoin rally up to $100,000, historically, it's going to reject off of the 50, which is going to probably curve down something like this. It's not easy to extrapolate the 50, but it's probably going to be sitting here somewhere around $100,000 plus or minus $2,000, right? So if Bitcoin is able to get up here to the 50 and it doesn't hold, then it's going to reject and it's going to come right back down to 80,000. And I'm going to tell you, a great number of people are going to enter into short trades when we hit 100,000. They're going to enter into short trades when we hit the 50. That is major confluenced resistance that is going to be difficult to break through. It's going to be very difficult to break through. And the only way that Bitcoin breaks through $100,000 is if you have some kind of macroeconomic tailwind. Now, the good news is there are macroeconomic tailwinds on the horizon. First and foremost, quantitative tightening is going to be ending at some point in the next 3 days. Quantitative tightening is basically stopped. It has not officially stopped. The official date is December the 1st, which is, 3 days from now. But when that stops, that means that the market is going to stop squeezing. And that also puts quantitative easing back on the table. You can't start going up till you stop going down. So the market, the liquidity at the Federal Reserve's balance sheet is going to stop shrinking, which means that the idea of it expanding is now on the table. We've rolled off $3.5 to $4 trillion worth of treasuries and mortgage-backed securities. The Federal Reserve is likely going to start injecting liquidity. The banking system needs that. The banking system is sitting on almost $500 billion in unrealized losses from different investments that have not panned out for them ever since 2020. We've also seen all kinds of issues with liquidity in the banking sector. So the Federal Reserve is likely going to end up dropping rates, increasing quantitative easing at some point in the next year as you start to see great strain on the United States economy. In general, what you're also seeing is that it's only about 10 or so major tech stocks that are driving all of the growth in the S&P 500 right now. And that probably can't last forever. I don't know whether or not you're going to see some massive AI tech bubble burst, but what I will say is that the growth that the S&P 500 is experiencing right now simply cannot last forever. But the Fed wants it to last forever. Trump wants it to last forever because there are political motives. So the only way that you cause this to happen, there's only two ways that you can cause the growth that you want in the S&P 500 to happen. Either one, you can actually stimulate growth in the United States economy, but that's too hard. The other way you can do it is you can pump liquidity into the market so number go up, but the reason number go up is because dollar go down. It's not actually because the market is growing, it's because the dollar is devaluing. And so if you want to maintain the 25% continual average growth rate that you've seen in the freaking S&P over the last several years, then what you're going to need to do is either have an enormous amount of stimulation to the United States economy, or on the other hand, you're going to need to see quantitative easing. There's probably going to be a little bit of both, but it's probably going to lean more so in quantitative easing. And so the Fed and the federal government, mainly the presidency, is probably going to continue trying to drive this stock market even higher. And so if they do, then that is where you start to see that quantitative easing. But this is where we actually get into the bearish component. If you do see QE announced and the QE doesn't come online immediately, then there's normally a lag. If you look at the United States Central Bank balance sheet, USCBBS, what you will see is that when quantitative tightening ended in the last, we have it up here twice actually, what you will see happen is that when quantitative tightening ended the last time, here on about September the 1st, 2019, Bitcoin actually went through a protracted correction following that decision. Bitcoin, and a lot of this was because of COVID, crashed 60% over the 180 days that transpired. But even without COVID, this is well before COVID happened. This is December 18th, 2019. This is several weeks before COVID became a big deal. Bitcoin, within 100 days, of about 120 days, actually, about 105 days after quantitative tightening ended, as you can see, Bitcoin crashed 40%. Now, we are in a much more stable market today than we were back then. So I'm not saying that Bitcoin is necessarily going to crash in 105 days, although 40%, although it could, right? But what we did see happen is that when the quantitative tightening ended, Bitcoin, just a few days later, dropped 15% in a day. So it was not necessarily a bullish event in the beginning when QE came online, because this was quantitative easing. You can see over here the Fed balance sheet. $400 billion was added to the balance sheet right here. It was not until you saw large-scale QE, like what you saw at the beginning of COVID in March, that Bitcoin started going on this massive run. Now, the good news is Bitcoin has managed to rally 700% during the bear market, despite the fact that we've been in this massive QT environment. So when you see QT ending, that's going to be bullish for Bitcoin in the long run. And when you see quantitative easing coming online, that's going to be hyper bullish for Bitcoin. But what you do need to understand, and this is very important that you understand this, is that Bitcoin went through a 180 to 200 day crash after the end of quantitative tightening, because there was this interim period where not a lot was going on and we didn't know what QE in the future was going to look like. With the benefit of hindsight, we know that QE came in a major way and that drove Bitcoin to the upside. But right here, when Bitcoin had rallied to $13,700, I was making videos every single day. People were freaked out when they saw this happen. They were terrified that Bitcoin was dead. And it was only those of us that held with conviction, because we knew what Bitcoin stood for. We are the only people that actually were able to buy down here. I was buying Bitcoin and Ethereum right here. I was buying $180 Ethereum right here. I was buying $5,000, $6,000, $7,000, $8,000 Bitcoin right here. I was very happy I did. And we're going to see something similar to what we saw happen back there happen again, although probably not on the same scale. And when you see QE come in, that could cause this. But the problem is, again, after quantitative tightening ended, you saw another 200 days of bearishness, and you saw a 60% crash. If Bitcoin, when QT ends, is trading at $95,000, if we did the same thing, Bitcoin would crash 60% in 200 days. That would drive Bitcoin down to 38 grand. I'm, again, not saying that's going to happen, but we cannot just say, okay, the Federal Reserve is cutting quantitative tightening, therefore Bitcoin is going to absolutely moonshot immediately. That is not a data-based opinion. That is a hypothetical and a sentiment-based opinion. Factually, the last time, and that's really the only good data we have, is that one data point, so it's not a lot of data to go off of, that the last time that we saw QT end, it was actually a short-term negative for the market. And so what we need to be paying attention to and what we need to lean into is the idea that so long as Bitcoin has not gone through this movement above the 50, broken above 107, we're in bear market territory and we need to act like it. Now, on the other hand, if Bitcoin can get above 107, then that's where, again, we'd be in bull market. If Bitcoin breaks above 107, it hits this liquidity cluster up here, which it very well may do. I mean, the market makers might want to run it up there. Then that's where you would say you're in a bull market. But what I will say is that we also, again, we talk to a lot of the people in the crypto space, and a lot of them have entries down at 75. They have entries down at 60. They have entries down at 65. And so they want those entries filled. A lot of big, powerful people want entries filled down at $60,000 to $65,000. And I've got a feeling that they're going to get it. So as much as I don't want to be in a bear market, I have to say that we're in a bear market. As much as I don't want to be a bear, I have to say that we're in a bear market unless Bitcoin proves us otherwise, because right now we have every single technical confirmation of a bear market that you could possibly need at the moment. So if we do come up here to the 50 and reject, because I'm extremely confident we're going to rally up to $100,000 sometime soon, but if we do rally up to $100,000, what happens from there? The most likely thing that happens from there is that if we reject, you're going to come back down and you're going to test the 200. The 200 weekly moving average has been used for over a decade in the Bitcoin and cryptocurrency space to ascertain where Bitcoin will come back down and find major market bottoms. If we go into the BLX, Brave New Coin Liquid Index for Bitcoin, you'll see that every single bear market, Bitcoin has dropped back down to the 200, this gray line, over and over and over again, even dropping a little bit below it during COVID here. We also dropped quite significantly below it here during the last bear market, but then we dropped back down here to the 300. So in general, based on recent data, you're likely to drop down to between the 200 and the 300. Well, the 200 and the 300 are moving to the upside pretty aggressively, although we need to plot them as if they're moving a little less aggressively because Bitcoin is trending down. But if you plot these lines as moving to the upside but a little slower than they have been, then, and this is just a range, this is not an exact figure or anything. These two moving averages, if you plot out to next year, let's just look at, I don't know, June. Let's look at June, right? If you look at June, these moving averages are sitting here at $62,000. The 300, which we tested at the bottom of the last bear market, is sitting at $53,000. And so for me, my stance on the market, I am very, very clear what my stance on the market is. I made it extremely clear ever since we broke below 94,000, because we said if 94,000 broke, then we would say that we're in a bear market. We've been extremely clear on being in bear market mode ever since then. So long as Bitcoin stays below $94,000, and at this point, so long as Bitcoin stays below that $107,000 target, which would be kind of that runway back to all-time high, then that is where we have to say that we're in bear market mode. a bear market bottom at this point in time, based on all of the analysis that we've done a mountain of analysis trying to figure out where the bear market bottom would be. It would probably be somewhere right in this zone of where these moving averages will be, extrapolated out a couple of years, a couple of months, a few months, sitting right here between $50,000 and $60,000. Bear market bottom, if we go into a bear market, which currently we're in a bear market, if we go into a bear market, then that is where that bottom is going to be. If Bitcoin does drop down to 50,000, feel free to consider that the greatest investment opportunity of the decade. Like, seriously, I mean that of what's left of the decade. I mean, this was the most significant, best investment opportunity of the decade, 15,000. But if Bitcoin goes back down to 50, that is the best investment that you're going to find this decade. I firmly believe that when it comes to risk to reward profile, because Bitcoin by the end of the decade will probably be trading at between $200,000 and $300,000 per coin. All right, now let's take a look at the short term. Before we do, I do want to let you guys know about a very, very, very important deal, because this is the last day this is available. You guys know you're probably doing all your Black Friday shopping right now. I know we are. It's very important that if you have not already, that you sign up for NordVPN. And the reason that you want to do that is because NordVPN is going to keep you safe while you browse online. Look, I have come to learn the hard way over my life that it is not about building. It is about protecting. It is not about growing. It is about staying. It is not about running fast. It is about not running out. You understand what I mean? The way you grow in anything is that you have to build a strong, firm foundation. And what is one of the biggest risk vectors to you as an investor or just as a leader? That risk vector, that threat vector, is someone attacking you, someone trying to steal something from you, someone trying to hurt you. And I hate to be the bearer of bad news, but there are hundreds of thousands of people out there, and they make their full-time living stealing from people just like you. And that is why it is worth every single penny to sign up for NordVPN. If you have not already signed up for NordVPN, you are making a mistake by not taking advantage of this deal. When you go to nordvpn.com/Jeb, you will find this page. If you hit get the deal, then you can come over here, and I highly recommend the Plus plan. It's $105 for a 2-year plan, 2 years and 4 months. For $105, you will get the first 28 months for 75% off. The reason that you ought to get the Plus plan is because for $25 extra, not only are you going to be getting the best VPN on the market. What's a VPN? Keeps you safe, keeps you private, keeps you protected, hides your search traffic, hides your internet traffic so that hackers and thieves can't see you and see what you're doing, etc. So not only are you going to be getting the best VPN on the market, you're also going to be getting all kinds of other things. You're going to be getting their anti-malware package. You're also going to be getting their browsing protection package. People are trying to steal from you, etc. Right? You're also going to get an ad and tracker blocker. Ads and trackers are constantly gathering information about you. I've run Facebook ads before. It's scary how much information social media platforms have about you, and the way that they get it is because you're not using a VPN. If you don't want people to have your information, the best way to not give it to them is to use a virtual private network so that they can't get access to your information. If you value the self-custody aspect of Bitcoin, you value security, you value safety, you value privacy. This is why NordVPN is a match made in heaven for you. Now, on the other hand, you're also going to get access to the password manager and breach scanner. I don't know about you, but sometimes before I use NordPass, because I use NordPass personally, I love it. This is why we have a sponsorship with NordVPN, because I love NordVPN. I use the product. Before I use NordPass, I try to log into something, and I would have to reset my password almost every time I logged into it because I forgot my password, right? That wastes time. If you do that 2 or 3 times a day, you spend 10 minutes, you're spending 30 minutes a day just resetting passwords to log into stuff. That is time that you could spend with your family. That is time that you could spend earning. That is time that you could spend doing technical analysis. That is time that you could spend investing. That's time that you could spend budgeting. That's time that you could spend praying. You could do anything with that time. And instead, you're spending it trying to figure out how to manage your passwords in your head. You're not supposed to be doing it. You're not supposed to be doing it in your head. You should have a solid password manager. You're going to get all of this value for $105 for the first 2 years, and you're going to get those 4 extra months. If you have not already, you need to sign up for NordVPN by going to nordvpn.com/Jeb. Get all of the stuff set up. You're going to be so glad you did. You're going to be safer. You're going to be more organized. You're going to not be being tracked. Your information is not going to get sold to criminals and thieves. I'm talking about your home address, guys. I'm talking about your email address, your phone number, this kind of stuff that you don't want thieves having. You don't want thieves having your home address, do you? Seriously, we've got to protect ourselves from evil people. And that's why NordVPN is so important, because it protects you while you're browsing online. Sign up with the link in the description box down below. Get it on your computer. Get it on your phone. Make sure you keep it on at all times. You'll be very, very glad that you did. Let's go back on over to the charts. I'm going to sit here and just look at the charts for just a second while I read some chat, and then we're going to talk about where I think Bitcoin is going next. All right. All right. Charts are garbage in crypto most of the time. You know, it's funny that you say that because they end up doing the same thing over and over and over and over and over again. When you do the statistical analysis and you backtest chart formations, that is simply not true. When you look at charts, you get an edge. It is very simple. You get an edge. This is a statistical fact. This has been proven time and time again. There's one video that I saw of someone that created random pricing data, and he input it to an algorithm that was trading the market. And he would just literally just random buys and sells. And this market ended up doing, just random stuff. But what ended up happening is the random data would eventually cause things like inverse head and shoulders patterns. It would eventually cause things like symmetrical triangle patterns or rising wedges. All of these patterns that we talked about showed up in the random data that this guy generated to make a random market. And you could actually trade the chart formations with random data and you could be profitable with it. It was incredible. These chart formations that we're talking about, they are a manifestation of the underlying mathematics of how the markets work. And so they're absolutely incredibly important, which is why I've dedicated the last 8 years of my life to studying charts, because they do give you an edge. There's a reason that technical analysts are in extremely high demand on Wall Street, because understanding how to read the markets is extraordinarily important. I cannot stress enough how important it is. All right. Bull market, bear market, bull market, bear market. Look, at the end of the day, we are in a bear market. I want to make that very clear. We are in a bear market unless proven otherwise. That is our stance. That has been our stance ever since right about here. That has been our stance since last Tuesday when we attempted to rally above $94,000 and we failed. Ever since right here, we have said that we are in a bear market. If we start breaking up here above that and break up towards past 107, that's where we can flip the switch and say, okay, Bitcoin is breaking the 4-year halving cycle. But right now, we don't have a choice if we're going to be logically consistent, but to say that we are in a bear market right now. Big shout out to Purple Ripple, Ripple 9038 for becoming a Jedi Youngling. Welcome to the channel. Really appreciate you guys being here. Really appreciate you guys being here. All right. So let's talk about the short-term technicals. Where do we see Bitcoin going from here? Well, it is bullish that Bitcoin broke above the 200 hourly moving average, and then we also broke up here to and above the 300 hourly moving average, which is phenomenal. On the 4-hourly chart, however, we are looking at Bitcoin being kind of stuck here beneath the 100, which is this red line. So let's go ahead and kind of turn everything off other than that. Bitcoin right now is stuck beneath the 100. And when we kind of just plot this one moving average, then you start to understand why it's important. As Bitcoin went into an uptrend here, it finds the support on that moving average. When we broke through it here, that's when we started going into the sideways market because we rejected off of it, right? And then we kind of went above it and below and above and below it. It was not until Bitcoin broke above the 104 hourly that we started going into the next leg up. So this is where if Bitcoin is able to, because we've rejected off of it multiple times, even right now, if Bitcoin is able to, hold this uptrend right here and use that to break confidently above the 104 hourly moving average, then that would be the next domino to fall for Bitcoin to go back up towards $100,000. $100,000 is in our sights, and that's where we think that Bitcoin is going to be going next. So, stay tuned for that. But in general, that's what needs to happen next. On top of that, Bitcoin also needs to break above these Fibonacci's. As you can see, when we draw a Fibonacci retracement off of this entire movement from 107,000, we find that Bitcoin rejected perfectly and flatly off of the 0.5, which is $93,000 right here. And then we also rejected just right off of that zone around 94,000, because if you'll recall, $94,000 is a very important zone that we've discussed when we take into account the entire uptrend thus far. That sits right here at 94 on the regular chart. On the regular chart, sitting right there at 94 on the 0.618. You understand? So when we look at these charts, what we see is that Bitcoin has this shorter term Fibonacci on the 0.5 on the regular chart, giving us resistance at 94. The longer term chart gives us resistance at 94 as well. So 94,000 is our next major target. And when we look at the logarithmic scale version of the Fibonacci's, because some people are looking at those, of course, so we got to pay attention to them, that actually explains why Bitcoin got resistance and support over the last 8 hours, because we rallied and hit resistance at the 0.5 on the linear chart for Fibonacci. We fell back and tested 0.382 at 90. So what happens from here? What happens from here is that in the long term, Bitcoin is in a confirmed bear market. In the short term, down here on the hourly and the 4-hourly chart, Bitcoin is in a confirmed uptrend. And so the trend is your friend until it ends. The way that we say that the trend is your friend until it ends is right now we say short term, we're in an uptrend, and that's our friend until it ends. And when we see this come to its completion, we say it's probably going to stop at some point sooner than like all-time high, because the bear market trend is our friend until it ends. Why is the trend our friend until it ends? The reason is because if the market is a sine wave, like this, then you want to get in here and you want to get out here. And you want to get in here and you want to get out here. And so you can't really do this. I mean, theoretically, this would be optimal, right? Getting out at the exact top and in at the exact bottom. But that generally is not something that you can do in the benefit of hindsight. Right? So what you actually end up doing in reality is you get in a little bit after the bottom and you get out a little bit after the top. And then you get in a little bit after the bottom and you get in a little bit out after the top, because the trend is your friend until it ends. And when it ends, you get these different technical indicators, different chart formations that tell you, okay, this trend is coming to its ultimate conclusion. And that's when you know you take your profit. What this looks like in reality is that if Bitcoin is on the ascent and it's riding an uptrend like this, then you will know that the trend ended when you come up and you do this number. When you set that lower high, you set that overside, underside test, and you reject, then what you would do is if you had market data that looked like this, just random market data, right? So it looks something like this, then what you're going to do is you're going to say, okay, Bitcoin was doing this. These are our trend lines. Bitcoin came down. We had a underside, overside test. You would want to enter into a long trade right here. And then if Bitcoin continued, these are just, real world examples of what this kind of looks like. If Bitcoin kept trending up here, you'd think, I don't want to get out yet because we're on the uptrend. I don't want to get out yet because we're on the uptrend. But if Bitcoin came back down and it tested here, then you want to get out there. And so a proper long trade would be getting in right here, just a little bit after the technical confirmation of the uptrend, getting in down here, getting out over here. And that's why we say the trend is your friend until it ends, because that's how you actually make money. What ends up happening a lot of times is that people say, man, Bitcoin's been bullish for 2 weeks now. I think I'll go long. And what happened is that they ended up getting in halfway or 2/3 of the way through the trend. So they get in right here. And then when they see the bearish correction, they're like, I don't want to get out. I haven't made any money yet. And so they don't get out. And then they end up saying, oh, crap, it's falling over. And then they get out down here. And this is why most traders fail, is because they don't follow the fact that the trend is your friend until it ends. This is a beautiful example of what market data typically looks like. It normally looks something like this. And so you just simply want to figure out through price action, through trend lines, etc., what the trend is. The trend ever since $80,000 has been bullish. Should you be going long right now? Not necessarily, because you're doing exactly what I just told you not to do, which is that you'd be jumping in the middle of the trend. Bitcoin is following a basic, very simple trend line right here. At some point, this trend will break, and that's what you need to do, is you need to not say, oh, I should have entered in over here. It's too late. What you need to do is you need to say, okay, Bitcoin comes up here, it does this number. If it does this, right there is where you go short. You see what I mean? Right? I mean, and you're going to get it wrong sometimes. I mean, you may have gone short right there, and then you had to have a tight stop loss and you lost an R factor here. That's okay. It happens. You're going to take losses as a trader. But generally speaking, Bitcoin's only going to fake a breakout once or twice until it actually breaks out. And when it does, if you've taken 1 or 2 R factor of a loss and then you make 5 to 7 R factor of a gain, you're going to make up for the losses and you're going to end up being a profitable trader. And so what we're looking at right now is that Bitcoin is in a short term, and what I mean by short term is like 1 minute to 4 hourly chart uptrend, and we want to see when that uptrend concludes. We can't just say that we're going to pick the exact top. That is typically not what we're going to want to look for. We're going to want to look for these big, long trends, and we're going to want to enter in as early as we can, get out as late as we can. If you're looking to go long right now, you're betting against the fact that we're in a bear market, which is not a good idea. So you should not be going long right here on the trading front. If you're investing, $91,000, a great entry if you're going to hold it for 10 years, right? Nothing wrong with that. Bitcoin's basically guaranteed to be a lot higher in 10 years than it is right now. Nothing wrong with that. But if you're trading on leverage, what you are not doing is looking for a long entry. You missed the long entry. The long entry should have been over here. How do we know to go long? How do we know to go long? Well, Bitcoin had all kinds of downtrends, right? All kinds of downtrends. Had a downtrend right here, for example. You know what Bitcoin did on this downtrend? You know when you could have gotten in? You got a downtrend right here. Underside, overside test. You could have gotten in right here. That would have been a great place to go long. And you know what? If you had done that on spot, you'd be up 5.36%. On 20x leverage, you'd be up 85% right now because you took that long entry because we rallied up here and then we built a head and shoulders pattern and then we rejected out of it and we rallied higher. So that right here is a place to do that. So what do we do now? What we do now is we start looking for a trend break. We're not looking for a long right now. We're already in a long trade. This is why most traders fail, because you're looking to go into a trade that's obvious. You're looking to go into the trade that the market is currently in that direction. Not what we're doing. We're looking for when the market changes direction. So first, we have to identify which direction is the market going. The market is bullish on our particular time frame, 15-minute. If it's bullish, then we're looking for the market to reverse bearish so that we can enter into a short trade. If it's already in an uptrend, we're not necessarily looking to go long. We're looking for when the market reverses, and that's when we will put the respective trade in. And so right now, we want to be looking to see, are there any major short entries? Well, one that you could take a look at here would be the 15-minute, or maybe even the 5-minute. You could say, okay, Bitcoin had this uptrend here, and we just rallied up to it, and we just did an overside, underside test. Basic price action. This is not a terrible time to go short. You could go short here on the short-term time frame, and you might expect Bitcoin to fall 0.5%. On 20x leverage, you can make 10, 15, 20% on that. Not bad. It's not the best entry. I'm not the biggest fan of this whole setup mainly because it already dropped so much that dropping a lot more is not too exciting. It's probably going to catch a bottom sometime. But this is what we'd be looking for, right? We'd be looking for some kind of overside, underside test. So what are we looking for right now? Sorry, my computer glitched out a little bit. What we're looking for now is we're looking for that kind of major reversal. And what I think is going to happen is I think that Bitcoin is going to grind its way right up towards 100,000. I think it's going to be up here at 100,000. You could go long here. The problem is you'd have a hard time finding a solid stop loss, right? Go long like right here. And you could say, hey, we've got this market support here, right in this zone, right? You could say if Bitcoin comes down here to the 100, 1 hourly moving average, maybe I'll enter and I'll target up towards, 98.9 or something. This is a good trade. If you can grab this, that's solid. That's where you could get in mid-trend because you're optimizing your entry and getting a conservative stop loss. That's a possibility. And if you guys want to take trades like that, make sure to sign up for 2Bit. Links in the description box down below, etc. But in general, I do think that Bitcoin's going to grind up towards 100,000. So there are opportunities to take advantage of that. But in general, unless you get a really strong entry, you want to be looking for those major swings and reversals in the market to get into your big trades. We still got CME gap at 85. No, we don't. It filled, and I'll prove it. We have the primary source, which is the CME futures chart. Luckily, it filled. We go down to the minute chart, you can see, and even on the hourly chart, it filled on the hourly also. But down here, we had the gap. As you can see, this is the gap. Totally filled. It was completely filled on Monday, November the 24th. It was completely filled this Monday. Even on the hourly chart, it's a pretty obvious fill. Right? Got a wick down here. Filled it. It's completely filled. That CME gap is no longer in play whatsoever. So that's good news. That means that Bitcoin doesn't have to... That's not something dragging Bitcoin down. All right. The bear market is ending soon. Don't you know anything about liquidity cycles? Another low IQ channel. Oh, ooh. Got me. Wow. Oh, I'm just... Man. I feel real bad. I know about the liquidity cycles. There's a very high possibility that that sends us into a super cycle next year. We don't know that yet. And the trend is your friend until it ends. And I really don't care if that makes me popular or not. The bottom line is we follow first principles. And the first principle is the trend is your friend until it ends. The 4-year halving cycle has not yet been invalidated, and so we should assume it to be true until it is invalidated. We've gone over through the duration of this stream the invalidation of the 4-year halving cycle, which would be a break above the 50 weekly moving average, and especially a break above 107, because that's where that liquidity cluster is. That would likely turn 107 into support. If we can flip $100,000 from resistance into support, that is where the 4-year halving cycle would be. That's where the 4-year halving cycle would be invalidated. But I do want to make this very clear for anybody who might think the way this commenter thinks. If you think that you can front run and outsmart reversal shifts, what you're going to end up doing is you're going to end up losing money. If you don't want to follow the principle of the trend is your friend until it ends, you're going to end up making really bad decisions. You're going to end up making bad trades. You're going to end up making bad investments. You can get lucky betting on a trend ending, but you're not going to get consistent doing that. There's a saying in the Marines that slow is smooth and smooth is fast. We need to slow down and stop trying to 1,000x our wealth over the next 6 months. We need to slow down. We need to use first principles, and you will make way more money doing that. The people that slow down and take a steady approach to markets are the ones that end up being significantly more successful. You need to adopt first principles, and you need to follow them. And one of them is tried and true, battle tested. The trend is your friend until it ends. Does that mean you get a slightly later entry? Yes. Does that mean you get out a little bit later? Yes, but it does also mean that your win rate is going to go up significantly because you're not constantly catching falling knives and you're not constantly stopping out trades too soon. Because if you end up trying to do this, bring up our market sine wave, right? If you end up trying to do this number, what's going to end up happening is a lot of times the market's going to blow past you and you're going to enter here thinking that you're catching the bottom, and then you're going to run down here and get liquidated. And then if you do catch an entry, you're probably going to catch an entry way up here because you're scarred from from catching a falling knife. You're going to get in up here and say, oh, I got 5% gain. So you're going to sell here, and then the market's going to go way up here. And then so you're going to do this number. In reality, this right here, buying the exact bottom, selling the exact top, buying the exact bottom, selling the exact top, this is not reality. That's not what happens. Unless you have an almanac from the future, that's not what happens. And if you think it's going to happen to you, you are either the smartest investor that was ever born or you're stupid. It's not going to happen. It might happen a few times, but you do that a few hundred times, you're going to lose everything. So instead of doing this number where you enter in too late because you're scarred from entering in too early and then exit too early because you're scared of exiting too late, you're going to get this little bit of a trade. Instead, what you can do is you can say, okay, so the market's got this sine wave formation. I'm going to try and enter here. I'm going to try and exit here. Yes, I'm not going to get the exact bottom because I entered a little bit too late. Yes, I'm not going to get the exact top because I exited a little bit too late. But that's a lot better than exiting here and Bitcoin goes way the heck up there, right? It goes way up here and you exited here. And so that's why you saw a lot of people that were OG whales that didn't know what they were doing. I'm sorry, they have $500 million and you don't. That's why you saw a lot of them exiting here and not here, because they're not trying to catch the exact top. They're trying to wait for some kind of technical confirmation. That's why when we double topped at 116, whale selling increased dramatically here. And people were like, oh, you're so stupid. You didn't get the exact top at 126. Neither did you. They got an exit at 107, at 108. And so the bottom line is, if you try and go and make up your own rules, then you will fail by your own rules. The way you succeed in the market is that the trend is your friend until it ends. And if you don't want to listen to that, then you have a grand old time losing money and enjoy rock bottom for as long as it takes for you to repent and follow good principles. I am not here to baby you. If you're being stupid and you're going to lose your life savings, I'm not here to tell you that you ought to feel good about that. Repent. Do what you need to do to build wealth and protect your family financially. It's important. It's more important than your ego. What are the top 2 reasons technically a lower low still needs to be made? A lower low does not necessarily need to be made. I'm not saying that. A lower low below 80 does not need to be made. It doesn't need to be made. What needs to happen is that the market doesn't need to do anything. What we need to do is we need to follow first principles. First principles are, if you are going to hold Bitcoin for more than 5 to 10 years, I don't really care where you buy it because you're going to be in profit if you give it enough time. I loaded up a bunch at 85. And you know what I did? I hit myself because I said, man, I could have loaded up at 80. I could have bought the exact bottom. And I'm over here buying right here. And I'm like, ugh, didn't catch the exact bottom. But you know what I did? I'm up now. Bought tens of thousands of dollars down here at 85,000. I'm like, man, I could have bought at 80. Oh, could have caught the exact bottom. But you know what? The market could have dropped and could have gone down to 60, and I bought too high. So when that trend ended, and we got a pretty strong idea that that trend was ending, that's when I bought. Put a bunch in at 85. And right now, as much as I want to do a bunch of other stuff, I'm sitting on my hands. I'm not doing anything. We're in the middle of a trend. Too late for me to go long on the way back up to 100. We could possibly get that entry down here at the 100. That's possible. That's doable. I'm going to look for that over the weekend, but it might not show up. And then on the other hand, I'm looking to see if we rally up to 100. Great. Okay, cool. Then our dollar value of our portfolio will continue going up. On the other hand, if we reject off of the 50 weekly moving average and move down, I am ready to acquire a lot of Bitcoin down here at 50, 60, 70, $80,000. And so that's what I'm doing. I loaded up at 85,000. You didn't have a lot of time to do it, but it was there. We did also, it's worth noting, the Bitcoin did drop down to the 100 weekly moving average. We broke below the 50, dropped down to the 100. There is a possibility that Bitcoin's doing something similar to what we did over here, which is we're going to bounce off of that and go into a rally, or we reject off and we go into a bear market. We simply don't know. I have given you strong and confident predictions before. We told you with 90% confidence that Bitcoin was going to 94,000. And then it went even lower than that, right? When Bitcoin was at 116, we said it was going to 94. It went to 94, and then it went lower. We also said that if it dropped below 94, then we would drop down to $75,000 to $80,000. We dropped down to 80,000. Now I'm telling you, we're probably going up towards $100,000, and I have no idea whether we're going to break through the 50 weekly moving average at 100K. I have no clue, no idea. So many things can change between now and two or 3 weeks from now when we are likely to hit that we really don't know. But what we do want to do is we want to continue following first principles. We want to continue making good decisions over time because we know that good decisions over time compound into the kind of life that we want. And so that's what we are going to focus on. We're going to look for trade setups on the short term. On the long term, we're going to be ready to buy a bear market rather than ready to run around like a headless chicken if we go into a bear market. We're going to be excited about the possibility and the prospect of buying Bitcoin at $50, $60, $70,000. And if it goes higher, then great. There will be other times to acquire. So that's really that's what I got for you. That's all there is to it. All right, good stuff, Jeb. Yeah, thank you guys. I really appreciate you guys being here. If you enjoyed today's stream, make sure to hit that like button, subscribe to the channel as well. I want to give a big shout out also to iTrust Capital, guys. New Year's coming up. You need to make an iTrust Capital account. If you've not already, this is a very important platform for you to sign up for. The reason is because you can invest in Bitcoin and cryptocurrencies through your traditional and through your Roth IRAs, but you got to do it with iTrust Capital. The reason is iTrust Capital has the lowest fees. They're the most secure. You have US-based, native English-speaking customer service. Nothing wrong with people that speak other languages, but if you speak English, you want to be able to hear from somebody that speaks it so you can understand them. You've got people that live in the United States that are going to call you and text you and say, hey, do you need anything? Can we help you in any way? We are here 24/7 to serve you. This is a very, very, very good platform where you're going to be able to invest in Bitcoin and cryptocurrencies through traditional IRAs and through Roth IRAs. You can also set up SEP IRAs. You can do 401k rollovers. So what you can do is you can have a 401k with the match. You can roll the 401k funds over into Bitcoin. Let's say you got $200,000 in a 401k you've been building for the last 15 years. You can roll that over and dump all of that into Bitcoin in the tax advantage structure using the employer match and everything. So there's so many different traditional investment vehicles that you can use with iTrust Capital to invest in Bitcoin and cryptocurrency spot. You're not buying IBIT. You're not buying the ETFs. You're actually buying Bitcoin and cryptocurrencies spot in iTrust Capital. And the cool thing about iTrust Capital is that you're using premium custody accounts, which means that it's basically completely unhackable. If somebody breaks into your iTrust Capital account because you weren't careful with your passwords, or for example, you didn't sign up for NordVPN, do a little cross post here. If somebody hacks your iTrust Capital because your data got out there, the only way to get funds out of your premium custody account is to withdraw to the bank account that you invested with. So you're not, literally, you cannot withdraw the funds to another account. You withdraw them to your own bank account, which means it's essentially completely unhackable. If somebody gets into your iTrust Capital account, the worst thing they can do is withdraw funds into your own account. So make sure to sign up for iTrust Capital by going to itrustcapital.com/go/crypto-jeb. And when you sign up, you'll be getting access to this special $100 funding bonus, this special offer. So sign up for iTrust Capital. The link is in the description box down below. Really appreciate all of you guys for tuning in. We are going to have to wrap it out. Stay tuned for tomorrow, for this afternoon's video that will be coming out shortly. I really appreciate all of you guys for being here. I love you very much. Let's continue pushing forward towards financial sovereignty, building a successful life for ourselves. Looking forward to the prospect of a bear market. I so hope Bitcoin goes down to 50,000. I really am just very much hoping that that happens. Would love to acquire more Bitcoin at those historic levels. If you'd like to join me on that journey, make sure to hit that subscribe button so you're here for every piece of content. We are quickly approaching 250,000 subscribers. We are on our way to 100,000 followers over on X. Follow us on X at CryptoJeb. And before I go, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.
Oh, I got a real good feeling.